Hello, lovely people out there. I'm Kate Hill, and welcome to a special monthly city update. This time we are talking about Melbourne again. Now, you know we give you the best commentary and content on our channel here. So before we do anything else, please let me ask you to subscribe to our channel, hit that notification bell so that you get all our expert hints and tips around buying, owning, and investing in property as soon as we post them. And if you enjoy our free content and you are finding it useful, which I hope you are, then please click on that all-important like button too. I really appreciate it. To explain who the heck I am and what I think qualifies me to be sitting here talking to you about property buying, owning and investing, I am a property professional. I have been in real estate, don't hate me, for a really long time, advising and helping people. I've seen most things happen. I've gone through the cycles, the ups and the downs, and I own and invest in property myself. I'm out there every day at the property coalface, and I do genuinely care about empowering you to get the best outcomes for yourselves. So stay tuned and join me for the next few minutes. You can also watch one of my videos here, and I've listed it in the description below, to see how I think the US election outcome will affect the Australian property market. Right, Melbourne. I just want to recap again on the past couple of times in that when we talk about the Melbourne property market, please always remember that this market has been one of the strongest and the most consistent performers over the last 4 decades. So over these last 40 years, the median house price in Melbourne overall has increased by 7.9% year on year, and the median unit apartment price has increased by 7.73% on average year on year. This is just an average, and this will vary across the different suburbs. The news out of Melbourne is becoming more positive. And despite what we might hear, think and read, Victoria and Melbourne property values have remained remarkably resilient given what's going on, with prices remaining largely steady overall, despite that drop in transaction numbers that we've seen. This drop in numbers has been evident all across the country. It is now starting to pick up as restrictions around those open homes and auctions were eased across Melbourne and Victoria a few weeks ago. Now, overall across the country, there were 1,739 homes taken to auction across our combined capital cities, compared with 1,757 over that previous week. Of the 1,388 results collected so far, 75% were successful. Last week, a preliminary clearance rate of 73% was recorded across the combined capitals. 1 year ago, 2,590 homes were taken to auction, and 70% of reported auctions were successful. Now, Melbourne, which is normally the largest auction market in Australia, saw the number of auctions held rise from virtually nothing in September to around 600 by the final week of October. Over the week, Melbourne was host to 603 auctions, while the previous week saw 611 auctions held across the city. This time last year, it was a much higher 1,242 homes that were taken to auction. Of the 502 results that were collected so far, 73% were successful, increasing from last week's preliminary clearance rate of 71.8%. 1 year ago, 74.3% of reported auctions were successful. Although values were lower across Melbourne through October, the trend rate of decline has been easing since mid-December, with a drop of 0.2%. This was the smallest month-on-month drop in values since the COVID-19 related downturn started in April. However, Melbourne homes are being sold quicker than new ones are being listed, with a massive 170% jump in new listings throughout October. Although buyer demand was still lower than this time last year, it was rapidly tracking higher in recent weeks, up 33.2% for the 4 weeks to October 25th, while the number of overall listings was 1.2% lower than this time last year. Rental market trends are showing a more significant divergence between houses and units. So between the end of March 2020 and October 2020, capital city unit rates are down a cumulative 4.8%, while houses have recorded 8.4% rise. Every capital city region has recorded house rents either rise more than units or decline by a smaller amount. The difference between house and unit rents is most significant in Melbourne and Sydney, where unit rents are down by 6.6% in Melbourne and by 5.8% in Sydney. It is higher in some suburbs. That's an overall figure. While house rents have seen a much milder reduction. The divergence in Melbourne and Sydney can be explained by a number of factors. Inner Melbourne's and Sydney's unit rental market has been one of the hardest hit in Australia during our pandemic, with vacancy rates rising and rents dropping. So while rent levels for houses have remained, as reported, fairly stable in the past quarter and generally over the past months, city unit rents have dropped significantly. Victoria has lost 66,855 international students, which is 36% of the prior total, and is the largest decline of any state or territory. Most of the real estate crisis, if we can call it that for now, is mainly focused on Melbourne CBD, where international students made up more than 30% of the population prior to the pandemic. Melbourne, Clayton and Carlton have lost the most students, while the Docklands area faces the biggest rental crisis, with vacancy rates at 14.2% higher than a year ago. Southbank and Malvern East also saw significant vacancy rate increases. So this substantial drop in foreign student numbers and the shutdown of overseas tourism during COVID-19 has led to this growing number of landlords seeking to secure permanent tenants for properties in these inner city areas of Melbourne. We then also add to that flood of Airbnb listings to the pool of available rental listings, as there are, as we know, no tourists filling this market, or at least much fewer tourists. The inner and inner ring suburbs have also seen that increasing supply of properties as new unit completions have continued to hit that market. This new unit completions rate is also impacting supply in some middle ring suburbs. Demand levels just aren't increasing at that same level as supply because immigration has been stopped and is likely to be impacted for some time to come. So we continue to issue our buyer beware warning for these inner city markets for investors. There will also be suburbs here that are on the lenders and the bank's blacklist, which means that a lender will require a much larger deposit from you as the buyer to cover their perceived risk. And that really won't matter whether you're an investor or a home buyer. The bank perceives those suburbs as risky, and that should tell you something. So keep it in mind if you're considering buying in these suburbs. CoreLogic say that since the announcement in September that private inspections were once again permitted, new property listings have surged, clearance rates have lifted, and buyer activity is recovering. So based on these recent trends, it's likely that we will see Melbourne follow the other capital cities towards a recovery over the coming months. Although I would say that many suburbs in other capital cities don't need to recover. They've been doing quite nicely, thank you very much. Please don't forget to subscribe to our channel, leave a comment below, hit that like button too. I really appreciate your support, and I will see you again soon. Bye.